All right, good morning, everyone. It's Friday. Happy Friday. It's May 11th. We had some economic numbers come out of the U.S. That were slightly bearish for the U.S. economy. There was some volatility right around the time of the announcement, and now everything has died down pretty well. You can see here from the daily that we're still trading inside of this overall flag pattern. But remember, I actually mentioned this, I think 3 or 4 days ago. We've got to be careful here. The longer this flag goes, the more it gets to be a sign of weakness. Okay, really a flag pattern is showing that the market, in this case, is pushed up, and then the flag comes in when the market starts to consolidate to the downside. Okay, so when consolidation starts to extend, you can see here, now it's no longer a sign that there's accumulation. It's more a sign of the market going to distribution or a sideways action. So we've got to watch out for that. Normally speaking, you're going to see the market push up, make a short flag, indicating that the market is relaxing. There's no real selling pressure. There's not a whole lot of buying pressure, or at least the buying pressure won't let the selling pressure overwhelm it. And then you'll see the market make the breakout. The reason why you get this breakout is because there's not enough selling pressure. Okay, the selling orders dry up. You got to remember we have to think about how the market is actually working here. We can see that this is in a broader move up. We've got this very long flagpole here with the market now coming down into this action here. If we zoom back out, let's go ahead and get some perspective. You can see here we're looking at this trading lane that the market's been in for quite some time. So if we do get a break, 2.07, 2.0650, if we get the market moving down, coming right into here, about 96.25. If it really starts getting going, then I'm expecting about 9,400. Let's go down to the 4-hour bar here. And, from here, again, we can see the overall flag pattern. We don't really have much setting up in the way of a pattern on this end of the chart. You can see that the market sold out very, very quickly, though, down to this level here. This level, of course, giving us an indication that there is some support slightly lower than our January and November high, or December high, December from last year, November in this year. We can see that the market has broken down past these two lows. And remember, I came out with an update where I was looking to possibly take this thing short. The market never broke through the downside of this flag, although I am now keying in on this prior low. This prior low here being support from back in January, and also obviously here in the early part of May. So we've got to watch how the market reacts here and be ready for the market to come off of that, continuing this downward pressure. If we go down to the hourly here, we're just now getting into an area where the market started to give us a reversal. You can see that was caused by the news, though. And again, I don't like trading these types, short-term breakout or short-term trend continuation or short-term momentum trades around the news releases. I think that's a fool's game, because you can get these violent whipsaws. So even though the market did spike up here, it wasn't a trade that I was looking to take, although this is a very good example of what a 3-bar reversal might look like, where the market takes out a prior high. So, again, for now, we really don't have much in the way of a pattern going. The market looks like it's trying to get this flag going here. I just don't like trading these kind of sloppy flags. Sloppy meaning there's the market pushing out right there, giving a little bit of a lower bottom and a misshapen appearance to the flag. It may turn out that this thing winds up working out, but it's something I'm waiting to get some more confirmation on and see a little bit better formation.